Good afternoon, traders and investors. Will back here with another one. Hope you guys are doing well. Hope you guys had a great weekend after a brutal end of week sell-off last week. This week, again, we have a bunch of earnings that we're going to cover here today. Going to take a look at that briefly. And I apologize for not making a video Thursday and Friday, guys. I was busy with some IRL stuff. But few earnings that we are going to go over that happened last Thursday and Friday, namely TSM and American Express. So we're going to cover those. We are going to cover, as usual, our major indexes, our major tech names, a few earnings, American Express and TSM, and lastly, my portfolio, because we did get assigned a few positions last week, and we're going to see how we're dealing with them this week. So today, guys, bit of a red day in the market. Started off well, but selling off into the end of the day. Take a look at the heat map here, guys. You will see that mostly everything was red. We did have big tech pulling ahead here on the front side, but as you can see, the rest of the market, guys, in terms of the breadth, is not very good for this week as well. Really consolidating a major sell-off here at the end of last week, leading us into more weekly downtrends, unfortunately, guys. So all is not lost, however. We are still remaining bullish on the rest of the year, in my opinion here. Just these yields need to cool down, guys. It's been a story of the yields for the past couple of weeks, and that is not going to change until we start seeing our 10-year and 20-year yields kind of top out here. It is going to be a fairly volatile market. You can see here on the relative performance on the 1 day here, the only major things in the green here today was major tech, and the rest of the market did have a pretty brutal sell-off, culminating in a downturn in energy here, 1.34%. That is actually good for the rest of the market, though. You do want to see commodity prices come down. On the 1 week relative, you will see, guys, that many sectors are in very deep red conditions here, with multiple percentage sell-offs here. You can see 3, 4, and 6% in real estate. So nothing small indeed. I want to take a quick look here at the fear and greed index as well. You will see, guys, that the market is still plagued with fear right now, reading coming in at 27, still a very decent buying opportunity in my opinion. So what do we got this week, guys? We have a lot of big earnings. This is going to start off your big tech week, and it's going to be a very large one here, guys. Not much today that I wanted to look into, but you'll see tomorrow before the open, we do have Coca-Cola and we do have 3M. Those are two of the main ones that I'm going to pay attention to. Spotify down here as well. And after the close here tomorrow, we'll take these one day at a time. But after the close here tomorrow, Microsoft and Google going to be very huge for QQQ. Can big tech once again save the markets? Or will we just continue these weekly downtrends? And then we also do have Visa as well. Texas Instruments here as a good look too. And on Wednesday here, have another big one, guys, Meta. Meta is supposed to have very decent earnings for this quarter. So I am expecting them to perform quite well. We'll obviously see how everything goes here. And then on Thursday after the close, you have another massive one, Amazon, and a close friend of mine here, Enphase. Enphase is going to be very telling for solar. But if Tesla's earnings were any indication, guys, it may not be good, guys. You obviously know that solar is an industry that is heavily financed right now. And with the financing rates approaching 7, 8, 9%, it's very tough for people to start individual solar projects on their homes or commercial solar projects at these high financing rates, guys. The financing rates have pretty much doubled since the same time last year. So that's why you're not getting a lot of lift in these companies' revenues, especially for solar, right? So that's a very big earnings week for this week. This week, we're going to cover our two last ones from Thursday and Friday, namely TSM and American Express. So let's get into that right away, guys. Let's take a look at TSM first, right? Taiwan Semiconductors, right? So you will see that after their earnings, they did have a very decent pop here of almost 4%. But what happened? So we'll explain here, right? So they did have a beat here on the net EPS by almost 9%, which is very good. And they did have a slight, ever so slight miss on revenue. But all is good in my opinion, guys. It was a fairly balanced report, not too much to write home about, but a fairly decent report indeed. And TSM, as you guys know, representing one of the best opportunities in semiconductors, them and AMD, in my opinion, still 37% off of our all-time highs. Taking a quick dive into their earnings here, you'll see Taiwan Semiconductor delivers beat and raise on their Q3 report. So it was a fairly decent report, guys, right? You guys know that they supply these chips to a lot of major companies, Apple, AMD, NVDA, and Qualcomm, just to name a few. But the thing is here, guys, that semiconductors as a whole have been having a slight downturn, a slight down cycle since pretty much the highs of last year. And that's continuing, but analysts are forecasting that the trough of the cycle is nearing its end here. And they do expect here to have a very bullish 2024 in terms of the guidance by the CEO here. You will see moving into the fourth quarter 2023, we expect our business to be supported by the continued strong ramp of our 3nm technology, partially offset by customers' continued inventory adjustment. So once again, another semiconductor company being very, very cautious on how much inventory that they do choose to stockpile here. Right, and you can see the headline, TSMC close to next cyclical upturn. A few analysts coming in here with that same opinion here. TSMC's strong results suggest the industry is close to a bottom. Note they say the industry and not the company itself is close to a bottom, about to enter the next cyclical upturn here. So very, very good. TSMC management said the company is seeing signs of stabilization in PC and smartphone chip demand here. So very, very decent earnings report as a whole, guys. But what I do want to focus on is the financials of the company. This is a company that you will see they are trading currently at a 15 PE ratio, which is very, very cheap, all things considered, in my opinion. You obviously do have a slight downtick in revenue this year as opposed to last year, but you will see profit margins have been maintained very, very strong in excess of 35%, which is exactly what you want to see for this type of company. And you will see coming into this year, guys, the main thing that I wanted to focus on, here, guys, excuse me, is the fact that they came into the year with a very, very strong cash and equity position here, guys. You'll see that their long-term debt outstanding was only sitting at about 29 billion, didn't raise it much this year, and their free cash flow and cash equivalents coming into this year is excessively high, guys. If they wanted to, they can repay all that long-term debt in one clean shot. So interest rates, what this means is that interest rates do not plague this company as much as you would think here. So TSMC still trying to shake off a bit of their weekly downtrend here. Nice little weekly upswing here. Pretty much looking for the weekly higher low for a potential rebound here. My sweet spot for this company is between $87 and $72. I do think it's a very good buy in that area here. Right, the only thing you need to watch out for this company is obviously the geopolitical concerns and their geopolitical climate in relation to China here. So that's pretty much it for TSMC. Decent level. I do prefer AMD myself because it is relatively at the same valuations. However, they do not have the geopolitical risk as well. And now the second company we're going to take a look at is American Express. So you will see here, guys, that American Express reported here on Friday, dropping at as much as 5% after earnings, but on positive earnings. And this was a surprise to pretty much everyone. You'll see double beat, right? Double beat on earnings by about 12% on EPS, which is fantastic. And also we did have a beat on revenue as well here, ever so slightly, but the company dropped 5% right into my sweet spot for buying. This is definitely my demand zone here. 150 all the way down to 131 is an extremely good level for American Express, in my opinion here, guys. You will see that they're currently trading, roughly 27% off of the all-time high, which is about 2.5% off of SPY. The growth prospects for the company are extremely bullish as well. I think this is a gift from the market to all of us, guys, to be able to pick up AXP down this low. You'll see the headlines here. Report record revenue for the 6th consecutive quarter. Very, very, very good. 13% increase in revenue to 15.4 billion, marking the 6th consecutive quarter of record revenue. Very, very good. Q3 earnings per share rose by 34% to a record quarter, guys, $3.30 per share. Extremely good. Now, the one reason that they did drop here, guys, is because of this line right here. Provisions for credit losses saw a significant increase of 58%. This is a year-over-year number to $1.2 billion. So they are pretty much locking in the expectation that credit losses could increase due to the consumer having to increase their credit spend and increase the amount of money that they're holding on their cards at any given moment. Obviously, you guys know that it's not a very easy financial landscape for the consumer right now, and credit utilization has been on the upside here. So they have been marking up a bit more for the write-offs here, which is one of the reasons why the stock did drop. However, with their net rise in revenue here and their net rise in exposure as a whole, you'll see, look, card member spending was up 7% from a year earlier on a foreign exchange adjusted basis, with spending by US customers up by 9%, right? And international up by 15%. So very, very, very good. But obviously a problem here if they can't capture all of that credit that they've lent to clients, and they do potentially have to just close people out if they can't pay back here. But overall, guys, membership is on the rise. Revenue is on the rise. They have a very, very solid financial position, guys. If you want me to show you the financial position, we'll pull it up right now here, right? So you will see that they came into the year with a very, very good cash position, guys. Not that much debt in relation to their free cash flow and cash equivalents on the short term here. They do have enough money to pay it off here. So even though we did have a slight uptick here in credit write-off markdowns here, you'll see that their profit margins are still very, very, very stable, bringing in over almost $2.5 billion every single quarter. In my opinion, guys, definite buy for the long term. It's just in an environment with higher rates, guys, these types of drawbacks are to be expected, but it does leave us with a very good buying opportunity for the stock, in my opinion. So that's pretty much it for our earnings that I did want to cover here today, guys. We will now get right into our technical analysis of our major indexes. So where do we stand on SPY? Well, SPY down 0.17%, QQ up 0.3%. QQQ, the only index in the green for the day here today. So let's recap here what happened over the last 3 days, right? We were always looking for the daily higher low and daily trend change. SPY was the only one that hadn't done it. I'll pull up QQQ very briefly. QQQ, daily uptrend confirmed. XLF, daily uptrend confirmed. XLV, you will see that the daily uptrend as well was confirmed. The only one that never did it was SPY, and this was the worry, guys, right? If you can't confirm the daily uptrend here, we were always looking for the weekly lower high. Anything below pretty much 453 was that lower high. And then there was the bears' turn to see if they could flush the lows or if the bulls would play some defense and start upticking the market here. Well, unfortunately, it was the former, right? The bears absolutely smashing through. New daily downtrend is confirmed. And at this point, guys, the weekly downtrend simply continues, right? Weekly downtrend continuing. Zoom out, you will see that on the monthly, we are still very, very, very healthy, guys. Anything pretty much above 380 is just looking for a monthly higher low. Coming into a nice little pocket here, the 420, I've always been commenting. The 420 is a very, very decent area of support. 420 all the way down to 405 pretty much. This little pocket right here is where you should expect some bullish action to start presenting itself, guys. And once again, if our yields start peaking out, the long-term yields, right, the 10-year, the 20-year as well, you need to start seeing these things putting in tops, right? So are they potentially putting in tops now? We will see, but until the tops on the yields are not set, and keep in mind, we do have Powell coming out with a statement in about 2 weeks for another interest rate decision, right? As long as we don't hit the tops in the yields and the bonds start participating in the bullishness, it's going to be very hard for stocks to do it on their own, right? So now daily downtrend is started on SPY. The bulls need to start everything from scratch. And it pains me to say this, guys, but it's just the way that the technicals work, right? So now any single bounce is going to be for a daily higher low below 438. And then we're going to see how high can the bounce get and can they potentially reverse this into a daily uptrend. But for now, the bears are in full short-term control the daily downtrend. They do control the weekly downtrend as well here. It's good, however, that we're ending up in a nice little area of support here. So in my opinion, if we are going to reverse, it will be in this area. We just need some yield participation to the downside as well. Now take a look at QQQ. QQQ as well, right? Daily downtrend has begun, guys. We've now flushed our previous lows. We were looking out for 351.60, flushed it ever so briefly today before resuming to the upside a little bit. So unfortunately, the bears have resumed their control. You can see that we're still plagued by this downtrending channel right here. So on the weekly downtrend is also a thing right now. Keep that in mind. The bulls need to start everything from scratch. So any single bounce from here, just going to be looking to get as close as possible to 368 pretty much to see if we can set up for that daily trend reversal. Now, big tech reports this week. So it's very possible that if all big tech does very well, we can get a nice little push here, guys. So it's going to be make or break once again for big tech in the markets, guys. If big tech does not report well, expects us to flush a bit further lower here, trending towards our 200 daily moving average around 345 towards the lower end of this channel. But if we do perform well, we could be setting us up for a little bounce here against this channel here. But now, unfortunately, bears do regain their short-term control. XLF as well, losing the daily uptrend. You'll see, right? So XLF completely flushing into a complete disaster here over the last 4 days. You'll see top to bottom, we're down almost 6% on financials here, guys, as once again, the story is the yields. It's really not more complicated than that. Don't need to look for any more information, guys. The major banks have all reported at this point, and they all reported fairly decent earnings, except for their net interest loss provisions that we've been talking about here on the channel. So you'll see that now the daily downtrend is unfortunately probably recaptured by the bears once again here, right? Flushing our most recent lows. So now we look up to the weekly downtrend simply persists. And we will be looking here, guys, for 31.50 all the way down to $30 to be a likely area of support for our markets. This is where I will be shopping for a lot of financial names, not only financial names like American Express that we just went over here, guys, but the index as a whole. I do think that this represents a very decent level of risk to reward. Very, very good support here, trailing back at least for the past year. So that is the area that I will be looking into, guys. We just need to wait for this move here to bottom up. And then the bulls will need to start everything from scratch in terms of reversing this, because now the bears control the daily and they still control the weekly. So very unfortunate, but we're going to still be looking for this reversal that we've been waiting for the past 3 months at this point here, guys, right? They tried to do it, just couldn't get it done. Bears were too strong. So now we need to reset lower. Moving down to XLV Healthcare. XLV Healthcare kind of caught in the same position, right? So setting the daily uptrend, not even lasting for more than a day, guys, before a massive reversal to the downside. You'll see that top to bottom pretty much once again 3.5% on healthcare. Healthcare is approaching our little area of contention here. These two yellow lines, which trail back pretty much all the way past for the past 2 years. Yes, we have a bit of spikes below here, but for the most part, this is our critical area of support. So where do we stand on these markets, guys? Well, the bulls losing the daily uptrend once again here. So a lot of momentum to the downside, guys. We are expecting this whole 127 all the way down to 125 to represent a good area of pretty much your air brake area, right? Where you want to see the bulls put in some support here. So the bulls were not able to keep the daily uptrend going here. Zoom out on the weekly. You will see that the likely expectation was just a weekly higher low into potential weekly lower lows. So eventually we will need the bulls to reverse this pattern. Just seems that they're not ready to do it yet. So if we do simply continue this, your weekly downtrend does continue, we will be expecting some support in this zone here. Need healthcare names to start participating more to the upside, guys. SPY cannot do it with only QQQ. We've been saying this for the longest time on the channel, guys. You need broad market support. I need financials and I need healthcare to participate. For now, they've just been kind of sidelined here. Now let's move down to the Russell. Russell absolutely falling apart, guys, here, right? So this was one that I said that I did not like the size of the bounce, right? In relation to all our other bounces, the bounce was very weak. And that was pretty much the telltale secret of you knowing that the bears were still in full control, right? Complete destruction on the weekly right here, guys. So we are now entering my sweet spot. It was 169 down to 162. We're already trading at 165, right? Our previous lows here in June and October last year are pretty much down here at 163. We're not that far off, guys, right? So you'll see that if we flush this, guys, it's going to start really getting critical for the bulls to start playing some defense here. IDM Russell, I do not like it, obviously, guys. This is entirely due to the yields, in my opinion. You obviously know that growth companies, if they're not that profitable and they have to leverage a lot of debt or they have to issue new shares, it's either going to cause very high interest payments or share dilution, which is not what you want to see as an investor. So in this case, guys, your bears regain all control of the daily here. Daily downtrend simply remains intact, and your weekly downtrend is fairly brutal as well. Our RSI levels are approaching very, very low indications in the low 30s now, which you haven't had since pretty much last June. Even last September and October, when we had this last final flush here, they did not get as low. So our IWM here, very extended to the downside, guys. I need to see a little bit of a relative bottom. I do want to play some short-term options here in the lower 160 area. I do think it represents some good value. You'll see now at this point, guys, that the IWM is currently 32% off the all-time highs, right? So very, very, very nasty sell-off here. But if you'll see here, guys, we're coming into the area that should be acting as some support here, right? All the way down to 158. This area is going to be absolutely crucial for the bulls to maintain here, in my opinion. So we're going to wait for that short-term reversal here. Going to need to see, can the bulls reverse into a daily uptrend? If not, the bears are just going to continue to steamroll. Dow Jones doing a decent job here of not selling off too much, but still in the red here, guys, right? Daily uptrend was confirmed lost it over the past 4 days as the rest of the market here. So once again, daily uptrend is lost here. You zoom out to the weekly, you will see that we are still in our weekly downtrend here, guys. So the bounce size was crucial on this, as I was saying, for all the other indexes here. So the bounce got some decent lift on it here, guys, but just not enough. Bears were able to roll that over in pretty much 4 or 5 days of trading here. So now we're coming in once again to our crucial little pocket, guys. 33,000 all the way down to 32,500-ish. Why is this crucial, guys? This represents your monthly support. Monthly support coming back all the way almost for a year now at this point, right? So crucial for the bulls to maintain this if they want to maintain this monthly uptrend going here. Flush this and you pretty much lose the monthly uptrend, and then it's going to take the bulls a long time to start recapturing this, right, guys? So very, very, very sensitive in terms of interest rates as well. Your weekly downtrend simply continues at this point. We're going to look for the bulls to play some defense, but as of now, full bear control. Once again, bulls need to start from scratch. Going to need to see the size of a daily bounce once it starts get going, and the size of the daily upswing at this point. What you want to see on all these things pretty much is you want to see this weekly leg down, this third weekly leg down, be as shallow as possible. Then the bulls put in a heck of a move to the upside and start reversing this into the end of the year here, guys. We should be getting some bullish seasonality. So let's see if the seasonality plays through. Now we will cover Bitcoin today because Bitcoin has an absolute monster rally underway here, guys. So we need to cover it, right? So it had started a nice little daily uptrend all the way back here. We were covering this about, pretty much 2 weeks ago into about a week and a half ago. And then we had a very sustained move up here, guys. Another 5.5% day on Bitcoin, looking very, very good. So daily uptrend confirmed by the bulls. At this point, weekly uptrend confirmed by the bulls, guys. We have not had a weekly confirmed uptrend since pretty much early on this year, January and February, where they set it back here, right? So very, very, very good indication by the bulls. Bulls are very, very strong. It's funny because Bitcoin is a risk asset, usually doesn't like it too much when yields are high. But as of now, guys, very, very strong move by Bitcoin here. They are on the verge of confirming a new monthly bull leg up here. If they do smash this most recent high here, which I think they barely did today, we pretty much came close to the dollar, 31,840 is going to be it. If you get a break and close above this on the daily, guys, your monthly breakout will be confirmed at that point on Bitcoin here. You really love to see it. So very, very, very good levels attained by the bulls at this point. If for ever which reason we do pull back, guys, there is tons and tons of space. We are very extended on the RSI. However, you guys know that it is crypto, so it can keep running here. But pretty much anything above 28,100 is just going to be for a daily higher low to sit down and reset here, guys, blasting above our previous areas of resistance. So if we do pull back, there is a nice little shelter here, nice little shelf that we can sit on for a potential resumption to the upside on Bitcoin here. Upside target is going to remain 34,000 in my opinion. Now let's move down to our major tech names, guys. So let's go through them briefly here. Apple with earnings next week, right? So a lot of these names reporting this week, so we can't do too much technical analysis on them, but we will do our best to derive where they could go to the upside and the downside. So Apple today reaching as low as 170, guys, right? 170 is key. What happened here is we did lose the daily uptrend. Daily downtrend is restarted by the bears here. And on the weekly, you are looking for still a weekly trend reversal at this point. This area is key, guys. 167 is absolutely key. It represents your previous low area that we absolutely cannot lose. So Apple needs to protect this area with its life. If not, we are just going to continue the weekly downtrend into further monthly consolidation, but your longer term bulls are in control of this chart 100%. So going to look for Apple to kind of tighten up here. Don't want to see them break this 167. We are in my sweet spot right now. You guys know that I have a position at 175. We did get assigned last week. We'll go over that towards the end of the video here. But what you need to see by Apple bulls is a double bottom here. Protect this and start really rallying back up to the 176 area. Reset the daily uptrend to the bulls here. If not, the bears have a chance to steamroll and flush this into a furtherance of your weekly downtrend, which would be pattern fitting at this point. We were looking for the size of the bounce. It was a somewhat decent bounce here, not able to keep it up here, guys, still traveling towards our lows here. So can the bulls save this with earnings next Tuesday? We will see, guys. Earnings in 2 Tuesdays are going to be absolutely crucial for this. We'll see if Apple can maintain these lows, but in a very decent buying level in my opportunities, in my opinion, still. Now, AMD as well, sacrificing the daily uptrend, right? Had a very, very decent bounce going on here. Now, sacrificing the daily bounce as well here. So daily downtrend, once again, started by the bears here. Going to need the bulls to really start, any single bounce here is going to be for a lower high. Anything below 106 pretty much is for that lower high for bearish continuation down here. What are we looking for on the weekly? Well, the weekly, we had a very decent bounce going here. It is still a very decent engulfing bounce. They need to protect the 95 level at all costs right now. This is your weekly trend change attempt, right? So you need to see the bulls put a stop to this now. Keep in mind, AMD with earnings next Tuesday, guys. So going to be absolutely crucial to see, can they hold these levels? And with any bullish earnings, you may be able to get a smash to the upside to around 112. But if they get bearish earnings, guys, we will simply continue this weekly downtrend to the downside here. And it will be your 5th consecutive month of AMD looking for the monthly higher lows here. So very, very, very crucial next week of trading for AMD. AMD still in my sweet spot here, guys. 100 all the way down to 82 pretty much. Come down to these levels. I'm very, very interested. I do have a position at AMD at 102. We got assigned last week. So if we do continue to pull back a bit lower, I will continue to add. AMD looking fairly good in my opinion. Just need to play some defense in these levels. Now let's move down to Amazon. So Amazon here, Amazon as well, right? Sacrificing most of the gains 2 weeks ago in the last couple of days here. So daily downtrend, unfortunately, is recaptured by the bears at this point. We will be looking to protect the 124, 123 pocket that they previously stopped at here, guys. Amazon, unfortunately, right, even potentially setting up for the weekly downtrend. This weekly bounce on Amazon was decent, but they weren't able to sustain, guys. And you can see how easy it was for the bears to roll back over here. So 123 is going to be absolutely crucial on this chart here. Flush 123, you end up in a weekly downtrend, guys. And Amazon has not been in a weekly downtrend since pretty much last October and November all the way back here, right? So that would be fairly notable to me. But if it does come down here, guys, I am a buyer. 120 all the way down to 110. Going to be very, very good. Amazon with earnings here in 2-3 days here. Thursday after the close going to be absolutely crucial. So one of two things is going to happen, in my opinion, guys. We're either going to come back up here and recapture our 134. If we recapture our 134, weekly downtrend is negated. You could potentially get the resumption of a nice new weekly uptrend here. But if for some which reason, guys, this week we flush our 123s, it'll be your first weekly downtrend on Amazon. We will be coming into these areas, into my sweet spot, and I will be buying. So either of the scenarios, in my opinion, are good. Come back up here, your long-term bulls are happy. Come down into here, people who want to be adding, like myself, will be adding definitely here, guys. I do expect Amazon to report some pretty solid earnings, but you guys know that even if they report solid earnings, they may just come down if the macro is not there. So going to be looking out in this area here for Amazon over the next few days, but bulls playing some good defense as of now in the whole 124 pocket. Now, moving on to Google. Give me a second here. So Google holding up better than most. Google, I'll remind you, was one of our lead bulls. Google was one of our lead bulls here, guys. And as you can see, unfortunately, they have lost the daily uptrend as well. So common theme across all these stocks in the last 3, 4, 5 days is they have all lost the daily uptrends. So Google and Meta were our lead bulls. Losing the daily uptrend at this point doesn't really affect Google that much. Why? Because we were in a weekly uptrend, guys. This is one of the few stocks that had maintained the weekly uptrend as well as Meta here. So any little pullback, as we've been saying in the previous videos, any pullback above 128 is just looking for your weekly higher low for potential continuation here. Now, Google with earnings pretty much tomorrow after the close here. So very, very tough to do some technical analysis, but two things will happen, right? Either we're going to come back up and push into these highs here and recapture your daily uptrend potentially and just move forward with your weekly uptrend as we've been going all the way through the 145 level, which is your previous resistance area. If we do come down, however, guys, we do have a lot of support down here all the way into the lower 130s, right? So keep an eye on that. Keep an eye on your 128. So we have a lot of space here to work with on Google if ever we kind of don't do well on earnings here, but it will be very curious to see, can they maintain this 128 level tomorrow after the close? Crucial level for Google. And especially since they're your lead bears, you do not want to see Google and Meta fall apart at this crucial point on SPY and QQQ. So need them to have good earnings, need them to have a positive reaction as well. We will see what happens tomorrow. But Google so far holding on better than most. Now let's move down to Meta. Meta, you will see with earnings after the bell on Wednesday as well here. Meta holding up better than most, but still in a new daily downtrend as well here. So daily downtrend by the bulls, by the bears is started. On the weekly, you will see Doesn't really matter why, because we're just looking for the weekly higher low. Anything above 288.37 is just going to be your weekly higher low on Meta, right? So very, very, very decent day on Meta as well, up 1.74%, protecting a lot of the gains here that they made in the last few weeks. Very big area of support down here. So earnings, one of two things is possible as well in terms of volatility. Either you're going to smash this 330 level here and just resume your weekly uptrend that was underway, or we are going to head lower, continue this weekly consolidation here, and then you'll be looking for your 288 level, right? Cannot lose this if you want to maintain a potential weekly uptrend here. Google and Meta with a lot more than others to lose here because they're the two only ones that are still maintaining this weekly uptrend. So let's keep a close eye on earnings on Wednesday. Now, Microsoft holding decently, guys. Not going to lie, even if the market's been falling apart the last 4 days, Microsoft has been holding off better than most, right? So Microsoft still with the bounce here, has not yet lost the daily uptrend per se. It's more clear on the weekly as well, right? So Microsoft is desperately trying to use this bounce and reset into a potential weekly uptrend. Microsoft with earnings tomorrow after the bell. So one of two things are going to happen here, guys. We're going to continue the daily uptrend up to the north side, crack 337, and you will have that. If you do crack 337, guys, it's going to look very good for weekly uptrend reversal, right? Crack this level here, crack 340 thereafter. It would be a new weekly uptrend. They would be joining Amazon and Google and Google and Meta in terms of your only tech names currently in weekly uptrend. So very, very curious on that here, whether or not it's going to happen. And if for every which reason we flush, guys, we're going to need to protect this 310, 311 area down here. If we come down into this area, it might offer me an opportunity here to be writing some options on Microsoft here in the lower 300 level. So let's keep a very close eye on earnings tomorrow after the close. It could go either way at this point, but in my opinion, Microsoft should have some fairly bullish earnings. Now let's move down to NVIDIA. NVIDIA recovering nicely here today, almost up 4% after getting absolutely destroyed in the past 4 days of trading, right? Really coming down off its high. NVIDIA had done a great job of maintaining a daily uptrend, and you can see, guys, in just 5 days of trading, they pretty much erased the last 3 weeks of trading, right? Stairs up, elevator down on NVIDIA, unfortunately. Very, very crucial to protect this 404 down to 400 level, guys. I will remind you that that is your weekly higher lows, right? So we've been kind of in a bit of a range here, guys, looking like a bit of a head and shoulders. I really don't like this setup on NVIDIA, to be quite honest with you guys. In my opinion, it will be macro dependent at this point. No earnings to save them until November 20th at that point as well, right? So going to be crucial for them to kind of make up for the lack of earnings here in just sustaining the levels at these higher 400 levels, right? So NVIDIA, what do they need to do? Need to desperately reset the daily uptrend here to the north. But if the bulls can't get it done, we are just expecting a lower high, anything at this point under 474, just for a lower high, and then we'll see. Will the bears be able to flush this area once and for all, or can the bulls once again save and reset the daily uptrend and protect us from a weekly flush? Have not had a weekly downtrend, right? This would be a weekly downtrend. Haven't had it on NVIDIA since pretty much August, September, October of last year. So crucial level to be watching on NVIDIA, in my opinion. But for now, bulls continue to play good defense in that area. Now our three last ones. Tesla, guys. Tesla getting absolutely crushed after earnings. You will see from top to bottom pretty much on that day, right, Wednesday, with earnings down almost 21%. Now, decently in my sweet spot. I'm very happy that I did not write any options leading into earnings because I would have been assigned no matter the level that I would have chosen in the 220s, right? So now Tesla, very, very, very red. Unfortunately, losing the weekly uptrend as well. So weekly downtrend started on Tesla. We are still looking for monthly higher lows. And until Elon Musk turns around his language on these earnings calls, guys, these earnings calls are not going to get any better in my opinion. So still looking to protect the 155 level. Anything above that, looking for the monthly higher low for continuation, guys. Q4 should be pretty good. We're going to get our first rollout of the Cybertrucks here. So that should be pretty bullish in my opinion here. Now, the daily downtrend is very heavy at this point, guys, right? So heavy daily downtrend. Oversold RSI. We're just looking for a bounce at this point. Huge earnings gap to be filled all the way up to 240 at this point. So we'll see, can the bulls put in enough of a move to reverse into a daily uptrend? They have to start everything from scratch. Have to start the daily uptrend, and then you have to start a new weekly uptrend push as well. So a lot of work to be done on Tesla, but they are in a very, very juicy area in terms of a buying opportunity right now. I've been waiting for earnings, the earnings volatility to kind of come out of the stock right now. So now at this point, guys, we're at a low enough level that I will be looking to write options anywhere pretty much lower 200s, under 200. I am interested at this point, representing a very decent discount on Tesla. But as you guys know, after my Wednesday's video, was not happy with the earnings call. Still believe in the company long term, but just some short term drawdown here. Now let's move on to our last two. Palantir here. Palantir, right? Palantir with a very, very, very negative move to the downside as well. But it's good that they had a lot of space to give up here. We were looking as of last week's videos, right? Looking for this level right here. Anything above 1482 was just for your lower high. They unfortunately rolled over. So daily downtrend at this point, it's okay because on the weekly, we have tons of space here, guys. So even though we lost the short-term daily downtrend here, we are still protected by a lot of space on the weekly. Anything above pretty much 1365 is just your weekly higher low for further continuation, coming into a nice area, right? This whole area, you'll see it better on the daily. This whole area is now acting as support, right? Previous resistance is support. So we'll see if Palantir can protect these gains here. Palantir, not with earnings soon, coming out pretty much the same day as Apple here, Tuesday, 2nd of November. So a bit of a way away. We'll see if the rest of tech can carry Palantir to the upside this week, but looking fairly good here, guys. Still looking for the weekly higher low for potential continuation, rejecting nicely today from our weekly 12 EMA. So we'll see if the bulls can put in a little bit of a bounce here. They need to reset everything from scratch, however, because now the bears have the daily downtrend. Still decent amount of space here, though. And now lastly, PayPal. PayPal, very, very, very unfortunate, guys, right? We are down into the $53 level. I still have not averaged down on PayPal. If we continue to plunge lower into the lower 50 area, I will be looking for an average down, guys. But after the last couple of days, I do kind of want the volatility to kind of come out of a lot of these stocks before I kind of jump the gun on some of these lower levels here, guys. If I can get them even in the high 40s, we'll be more than happy to do so. PayPal, daily downtrend, right? So PayPal unable to do anything whatsoever constructive right now. We will be looking for the bulls eventually to stop this move. RSI is in the oversold territory. I need the bulls to set a daily uptrend, guys. We've not set a daily uptrend here pretty much since August, right? So very, very bad performance by the bulls at this point. The stock's valuation continues to get cheaper and cheaper at this point, guys. I am very, very bullish on PayPal. It's just, it may take an earnings cycle and a macro reset here across most of major tech to kind of carry PayPal out of the weeds here, guys. The bears are in full control at this point, right? Any single support will be very, very long-term support, guys. We're now back to June 2017, right? 6.5 almost years of discounts here, guys. We're really trending kind of almost back to IPO prices, right? So very, very juicy discount on PayPal, in my opinion. Just no sign of the bulls yet. It is a continued opportunity to just DCA into this stock for me, in my opinion here, as it does represent some very good value at these levels. Getting a bit oversold here, but eventually, soon as we do see the daily uptrend here, guys, it will be looking better and better for the bulls here. Going to need for them to also reset the weekly uptrend eventually too. Might only need this earnings cycle on Wednesday, the 1st of November to potentially help us do that. So that's pretty much all I had for today's video for you guys. I'm going to cover the portfolio tomorrow since nothing will change, just some covered calls on my assigned positions last week. So portfolio will be covered tomorrow because today's video was a bit long. I apologize, had a lot to catch up on from last week. So hope you guys have been well. Hope you guys had a good weekend here, guys. And once again, this represents a very good opportunity to be buying, guys. When the fear is down here, you need to be thinking of buying and buying solid companies here, guys. I am very bullish for the outlook on the next 6 to 12 months. As I've been saying, guys, the only responsible catalyst for this, other than the whole situation that we have in the Middle East right now, is largely due to our yields. When we get the top out on yields, when bonds start participating, you guys will see the lift that we get in equities. We are just getting our much needed technical pullback after a very, very strong first half of the year, guys. Our long-term bulls on everything are still massively in control. So do not forget that. And happy trading. I'll see you guys after the close tomorrow. As usual, have any questions, comments, if you want me to look at any stocks, macro, or options, leave it down in the comments and I'll be happy to answer you. So take care, guys. I'll see you tomorrow after the close, and peace.